So let's talk about Chainlink. If you're holding it or even just watching it, you're probably feeling, well, a little confused, right? On one hand, you have this massive ambition to connect all the world's data to the blockchain. But on the other hand, the price chart is telling a much, much more painful story. So what's the real deal?
All right, let's just rip the Band-Aid off and start with the hard reality. Right now, as I'm talking, the price of a single Link token is sitting around $8.80.
And with a price like that, what do you think the market sentiment is? Yeah, you guessed it, extreme fear. The fear and greed index is basically at rock bottom, which pretty much confirms the anxiety that a lot of investors are probably feeling right now.
Okay, so first up, let's dig into the bear case. Why are people so scared? Well, the data is screaming a pretty clear warning, and you really have to pay attention to what the charts are telling us.
I mean, just look at this. It doesn't get much clearer. We're talking about the simple moving averages, a key indicator for traders. And across every single important time frame, from the super short term to the long-term 200-day, it's just a wall of sell signals. The momentum? Yeah, it's pointing straight down. And this really pulls it all together. It's not just one or two indicators. We're talking about a whopping 74%. That's nearly 3/4 of all technical signals flashing bearish for Chainlink at this very moment. That is a heavy, heavy consensus. And to really put a number on the pain here, this isn't some minor correction. The price is cratered by a staggering 67% from its recent high back in October. So yeah, it's been a tough, tough ride for anyone who's been holding on. Okay, but here's the thing. That is just one side of the story, right? That's the scary part. Because even though the charts look bleak, there is a really compelling counterargument. And it comes straight from the co-founder himself. So, here's what Sergey Nazarov, the co-founder, is saying. He's basically arguing, hey, this downturn is not like the last one. His point is that we haven't had these massive system-breaking collapses like FTX this time around. The foundation of the market, he thinks, is just healthier. And wow, does this next number back him up. While crypto prices have been in the dumps, the value of real-world stuff, think real estate, gold, you name it, being tokenized on the blockchain has absolutely exploded. We're talking a 300% jump in just the last year. That's growth based on actual use, not just hype. And this is so important because it points to real, tangible value. We're talking about creating markets that are open 24/7, enabling totally new ways to use assets as collateral, getting real-time data, all this cool stuff. And get this, the on-chain data shows that the amount of Link on exchanges is actually going down. What does that usually mean? It suggests the long-term believers, the hodlers, they aren't selling, they're hanging on tight. And when you see that kind of fundamental growth, it's no surprise that some forecasting models are painting a very, very different picture for the future. I mean, they're projecting prices hitting over $20 by 2030, and maybe even close to $50 by 2050. Now that's a long way from where we are today. Okay, so how on earth do we make sense of this? On one hand, you've got pure fear in the charts. On the other, you've got massive long-term optimism. Well, to bridge that gap, we need to talk about a classic pattern that every trader knows and, well, frankly, fears. It has a pretty grim name, the dead cat bounce. But the idea behind it is absolutely critical for any investor. It's that fake-out rally, a temporary jump in price during a huge downtrend that tricks you into thinking the worst is over right before the price falls off a cliff again. So how do you spot one? Well, traders look for a very specific 4-step pattern. First, you get that massive, sharp drop. Then, step 2, you see a sudden little bounce, but it feels weak. The buying volume just isn't there. Step 3, that bounce hits a ceiling, a key resistance level, and just can't break through. And then step 4, the original downtrend kicks back in. Okay, so now we have a way to look at this. We have a framework. What we're seeing with Chainlink isn't just random noise. It's this fundamental battle between the short-term, fear-driven charts and the long-term, optimistic growth story. And this slide just lays it all out perfectly. Think of it like a title fight. In one corner, you've got the short-term technicals, extreme fear, those unanimous sell signals, and the looming threat of a dead cat bounce. And in the other corner, you have the long-term fundamentals, the founder's confidence, that insane 300% growth in real-world assets, and those super bullish long-term price targets.
So it all boils down to this one single multi-million-dollar question you have to ask yourself. Are we watching a classic dead cat bounce, just a trap waiting to spring on hopeful investors? Or is all this fear and uncertainty just the cover for the very quiet, very early start of Chainlink's next massive bull run?